And today we're going to chat about the real estate industry, the mortgage industry, and the housing industry as a whole. And with me today, I have two really great gentlemen, Sean Phalon, who's the chief executive at Brighton Bank, and Randy Rice, who is a top agent and team leader at EXP out of New York City. Randy has extensive financial experience. He used to yell and scream on Wall Street. But those days are over, so we won't delve too much into those, Randy. But today we're going to talk about the real estate industry and how things are different than when many of us, much like myself and Randy, not so much Sean, were younger in an industry and things were very different. You know, I remember when I graduated from college in Boston, Mass, and I wanted to get into business. And I loved housing. I had come out of the restaurant industry. I loved serving people. And I didn't know quite what I wanted to do. And I ended up getting into residential real estate because I was serving people in one of the most important decisions they make in their life, where they call home. And I took great pride as a realtor. And I love serving the customer needs. But as we all know, there's different parts of the real estate practice. There's the realtor, there's the mortgage industry, there's the insurance industry, there's construction, there's all sorts of different elements that are part of the housing industry. And yet each of those industries rely upon each other because without the insurance professional, the home can't be insured and the transaction can't exist. And certainly without the mortgage loan officer and the company, lending can't occur and the person can't purchase the home. My experience has taken me from being a realtor in Boston to operating and being the chief executive officer of RE/MAX New England, RE/MAX Europe. And while I was in RE/MAX Europe, the conditions there in the real estate industry a bit different than the United States. And many people there pay cash. So the lending industry in Europe and other parts of the world are vastly different than what they are here in the United States. But today, we're going to talk about our industries, but truly the fact that there is a housing industry and we all are relying upon each other. And one of the things at the heart of our discussion is who truly can cross over into different industries and be able to help that consumer, no matter whether they're a buyer, a seller, or an investor, achieve their goals. When I was first in real estate, I would go to my local mortgage loan officer when I had a client who wanted to purchase a home. Now, I had two choices because I worked for a company, an independent company in Boston. It was called DeWolf New England. DeWolf was eventually bought out by NRT, a division of a company that operates in New Jersey that operates several brands. And NRT was the purchasing company that paid $147 million for DeWolf New England in 1994 and bought them out and turned them into Coldwell Banker. However, when they were DeWolf, they had DeWolf Mortgage Services and they had DeWolf Insurance. So the company itself had different divisions within it. There have been several companies that have operated and still operate today that have those divisions within the corporation itself. However, during those days, I also had a consumer that shopped other loan companies for the best rate and the best terms. And we certainly, as realtors, had to disclose that. However, as I became an executive with RE/MAX, we looked towards improving the brokerage margins by joint ventures at the time. And this was during the 90s. I then went to Europe, but when I came back, I was told that joint ventures was not a word that you want to mention because things changed during the 06 to 11 marketplace. And MSAs were the norm. Contributions to a relationship where both parties in both industries would participate in a function that would attract the person who is looking to buy, and the realtor would serve the housing needs and the mortgage person would serve the lending needs. Whenever there's crisis, there's change. And Randy, more than any one of us on the call, can speak to that in regards to Wall Street and different other types of industries, because we've all been through economic change and we're going through change today. And when there's change, there's opportunity. Today's conversation is about what opportunity there is for corporations, but most importantly, what opportunity there is for you. No matter whether you're listening to this as the realtor, the loan officer, the broker, or the owner of a franchise or a corporation. There's so much opportunity today, but yet what we do is, as human beings, we and professionals, we tend to look at the past and fear certain elements. And what that does is take away our hope that there might be an opportunity. Everyone has an opinion. And what I've learned in business in 30 years in this industry is we need to rely upon facts and what is possible. So what our conversation today is about is how Brighton Bank and Sean's corporation is meeting the needs of the consumer today while doing it in the confines and the pathways of our federal requirements and registrations, but giving people the opportunity to serve the consumer while gaining more financial freedom. So that is kind of a foundation to our conversation because it could go in different ways. And we hope that we share things today that help you determine what your next step is in your career and your pathway. So Sean, let's start with a little bit of the history of what Brighton Bank is today, but kind of where did it come from? Because I've found that no matter what industry we're talking about, we need to take a look at historic reverence and respect where they came from in order to determine the value of today. So tell us a bit about Brighton and where it came from and what's going on today.
Yeah, thanks so much, Chuck. So at Brighton Bank, we've had a little bit of journey, and originally it was a team of mortgage professionals that started a company called Get a Rate, and we did a lot of direct-to-consumer work. Well-established mid-sized company here based in New Jersey, and did a lot of work in about 12, 13 states across the nation. And about, I guess, 4.5 years ago, we began to look at the industry, and we got, frankly, a little concerned about some of the predictions in the industry. And I think if you rewind the clock back 4 years, Chuck, you can look into the real estate industry and say, boy, there's definitely some changes coming. Technology is barreling down on us. And sometimes I don't think everyone understood exactly how to use the technology, but they just knew that if someone could figure it out, well, it was coming, right? Now, fast forward, we have AI that is all over the place. ChatGPT is a household name. And so we began looking at these things, figuring out, is technology really going to change the way the real estate is done, the way mortgages are done? And the abundant conclusion was yes. And so we began working on a platform that would actually allow the loan originator and the real estate agent to truly partner up together and to really merge roles. And that was a bit of a trigger term at the time. Now, obviously, it's become a little bit more commonplace, and everyone's kind of trying to figure out how to do it. And so back then, the thought was, well, if we could try to get away from the MSAs, if we could try to get away from the traditional ways of brokers and lenders exchanging money back and forth in a way that honestly really truly wasn't compliant. We need a compliant but a scalable way to allow the real estate agent in a vastly changing market to somehow partner up with the lender and be legally compensated in a scalable way. And so we began working on that about 4.5 years ago. And we fast forward today as Brighton Bank, we acquired a federal bank to where we could roll this out in all 50 states without a lot of the barriers and a lot of the testing and the state specific regulations. Now we're national on a federal level, and we have a system that allows the real estate agent to actually become a licensed loan officer as a hybrid agent. And so we began working on that. Fast forward today, we have the hybrid agent program, and it's a way for real estate agents as licensed loan officers to not just exchange money with a lender, not put together an MSA in a way that could be interpreted one way or the other, but a truly legal way for them to be compensated on the loans that they originate while partnering up with a bank that can do that in all 50 states.
And Sean, is Brighton the only one in the nation that's doing this, or is this being done by other companies?
There's other versions of it that are out there. Matter of fact, there's probably many different versions of it. To our knowledge today, we're the only national lender that is rolling it out on a corporate standpoint. We've come across little pockets of folks here and there who are trying to do it on a team level or an individual level with their personal referral partners, but we are doing this as a company, a wide model across the nation.
All right, and I've always found with federal regulation, it's either yes, you can do this, or no, you can't do this. So could you speak to that just a bit, because I know that's on everyone's mind that's listening.
Yeah, no, it's a great point, right? And I like that way you say it, right? It's either a yes or no. And sometimes we even look at situations where, like MSAs, where, generally speaking, they're accepted as the norm. But truth be told, every MSA is really a RESPA violation, right? We're exchanging money for business back in some way, shape, or form. And so with having the real estate agents become licensed loan officers, it's amazing what a license can suffice for, right? You cannot be legally compensated on loans if you're not licensed. So our goal and our dream was, and now reality, is to be able to have qualified real estate agents to be able to come on board, get licensed as loan originators, and be compensated on the loans for their clients. And that is a completely federal legal way of doing business. What we needed was a federal bank so that we could roll it out in all 50 states and not have the need for those agents to pass that national test and then pass additional state tests and then do continuing education every single year. That becomes like a second job for the real estate agent. So before we went down this road, we had our team of RESPA attorneys look at this. We made sure that from a federal standpoint, to the letter of the law, that this was going to be something that we could roll out on a national level. This wasn't an experiment. This wasn't something that we said, oh, let's, toss it out into the waters of the real estate market and see if this worked. And we wanted to make sure we were fully compliant on it in every way, shape, and form, from our technology to just the base level of getting agents licensed as loan originators. And Chuck, that's where a lot of these models fall apart, is they're trying to get real estate agents compensated for the loans that they're bringing in without getting them truly licensed loan originators. And that's a non-scalable way to do it. It gets very gray and frankly, most of the time falls on the side of illegal activity. So we wanted to completely avoid that, be abundantly compliant, and make sure that we could have every single real estate agent who was going to sign up for the program be licensed loan officers and thereby meet all of the requirements for compliance.
So that goes to a question to you, Randy, as a licensed real estate agent in the state of New York. Have you gotten your license? Are you thinking about getting your license? And do you know other people that have gotten their license who are getting compensation on both sides? Randy, I think you're muted.
There we go.
There we go.
So most definitely I am getting my license, and I'm aware of a few other people, 2 other people on my team are getting in the process of getting their license. They're in the middle of taking the class right now. And when I look at the ease at which you can get licensed, just a 20-hour course that needs to be taken with no test, it becomes a complete no-brainer. Why would every real estate agent not get licensed? If they're doing business, there's no downside to having that license at all, right? So from my perspective, the ease at which you can get licensed, the ease at which you can originate business, because the value really is in who brings the customer. And the real estate agent is the tip of the spear. They make first contact with the buyer. So they have the opportunity to bring the customer. And then in this system, they can take it and hand it off to a senior loan officer who can then handle all of the hard work that remains, although the technology that we have is taking the place of a lot of that hard work. So it makes for 2 different type of job descriptions. One is really a loan originator as opposed to a loan officer. And the loan officer on the back end, technology enabled, brings that football to the finish line.
Yeah, I can remember when I was a real estate agent licensed in Boston, I never thought about getting my license because I thought, well, I can't do that. I'm a realtor. I can't do that. And it goes to what you said, Shannon. You either can, the feds say you can or you can't, but there's nothing saying that you can't have both licenses, correct?
Correct. There's absolutely nothing prohibiting that on a national federal level, which is why we were able to do this, and we built it into our entire business plan as a company, because what we believe with it, Chuck, is that the consumer wants transparency, right? The consumer wants transparency. They want to see that they can have the same information from the real estate agent, from the loan officer, and see that themselves, right? They want to see that. Now, today, more than ever, the millennial generation is the most financially conscious generation in history. They can hop on Google and research the heck out of just about anything that you and I say today. And sometimes that research is faulty, but sometimes it's spot on. And there's a lot of people in this industry that have taken advantage of people's lack of education and lack of knowledge on certain subjects, in particular, the most important transaction of their lives, which for most of them is the purchasing their first home and the subsequent homes after that. And so our goal with this was to be able to make sure that there was a complete transparency model with the real estate agent having their license as a loan officer, as the loan originator. They can disclose the exact same information from the bank and see it. There's no miscommunication between the hybrid real estate agent loan officer and the team at Brighton Bank and to the customer. Everyone sees the same information. And going into a world of the millennial generation and then Gen Z closely following, having that kind of transparency and trust is what those group of people want, right? They want that when they're doing business.
Yeah, absolutely. And it doesn't matter whether I was working for DeWolf New England, in my early career, Remax, CEO of HomeSmart. I've always found culture drives companies. So people join a company based on culture. However, culture actually limits us too in our doctrine, because like Randy's a good example of that. He's in one of the burbs of New York. Now, if you're in one of the boroughs, you're not going to operate in another borough, because real estate, as a real estate practitioner, has been very provincial. You don't, Randy, have you ever sold a house in Hoboken? No. And Randy, you're muted again.
I did have a license in New Jersey, but I never sold a property in New Jersey.
Right. So real estate traditionally has been provincial. And what professionals are showing today, whether it be on the real estate or loan officer side, is that it is breaking state boundaries. And professionals have been learning that, why am I only working on the provincial concentric circles of my neighborhood? Randy, your business at EXP, you have people that are within your business structure that are not only across the United States, not just in New York, but around the country. Around the world, correct?
I have 1,200 agents in 48 states and 7 different countries.
There you go. So as we think about that, like, it boggles my mind to remind myself how I thought as a 25-year-old kid working for DeWolf New England. I was very proud of the company that I was with, because it had a great culture based on principles and values. And I believe that there are plenty of real estate companies that have that, EXP and many others. There's plenty of mortgage companies and banks that have that. Brighton, Movement, many others. However, what provides the opportunity, whether it be through technology, through structure, or through adapting to a changing marketplace, that allows that loan officer to be, or the realtor, to be able to maximize the revenue for their family? That's what's at the heart of our conversation. Sean, you talk about the transition from Getarate to Brighton Bank. Am I hearing correctly that the main reason for doing so is to move from that state to state licensing challenge to being able to, no matter where a realtor is in 50 states, what they need to do is, like Randy said, pass their 20-hour test, they become an employee of the bank, and they can operate in all 50 states?
Yeah, spot on, Chuck. That is one of the main reasons that we did that. We wanted to make sure that we could do this model on a federal level and not inhibit agents from following the same model that real estate is shifting to Randy's point, he's got agents in multiple countries, in states, the majority of states here in America. You're talking ever since, the whole COVID fiasco happened, the world has become much smaller. And the way you can communicate, like what we're doing here, is every day, right? Doing video conferences and these meetings and all that. That was more the exception to the rule. Now it is a part of our intricate business. So we wanted to make sure that if we were offering a solution to more of the national, global marketplace of real estate, that we could do it immediately, and that we didn't have to go through the rigmarole of state by state by state. Because there's two pieces to the market that I think you have to be prepared for as a real estate professional. To Randy's point, you have to go everywhere. You have to have a far-reaching footprint. You can thrive locally, but in order to truly scale, and that's the key, scale, you have to be able to do that by going wide. And so we wanted to be able to take this model wide with the federal umbrella. And then in addition to that, right, you have to be able to take a look at the industry and figure out where is the shift. And we believe that the shift is happening with agents, loan officers, insurance professionals, a lot of the financial sales professionals in the United States, in particular real estate, is going to really congeal together over the next couple of years with the internet, with technology on applications at people's fingertips, research and information abundant. The value of a lot more individuals decreases down to a few true professionals, people who are truly experts in the real estate field, truly experts in the lending field, truly experts in these other legs of the business. And so with that in mind, there we go, right? We have the hybrid agent program for people who are great at real estate, who can connect and partner up with folks who are great at what they do on the lending side, and really ride that wave of this industry merging together into itself, and have not just a way for them to do it, but a way that is scalable on a national scale.
Yeah, and the industries, no matter whether we're talking about the real estate industry, mortgage, insurance, they have all been calling for the person who's most professional or runs the biggest team will dominate. The Pareto principle of 80-20 is out the window. It's not even 90-10 anymore. It's the top 5% is doing, 90%, 95% of the business. Let's talk about Randy for a second and talk about what responsibilities that hybrid agent has. Because if Randy has a network of real estate agents that span 48 states, and a person on his team is doing a loan in San Francisco, as a hybrid agent, Randy certainly can be involved in that process. But Sean, can you speak to what level of responsibility? Because we all know the loan officer has different responsibilities. The underwriter has different responsibilities. There are different functions. Talk a little bit about how is Randy involved? And then after you discuss that, let's talk about how much they're paid.
Right. So the involvement is key, right? Because there's compliance parts to it, and there is work that needs to be done. Now, who does those pieces of work and those responsibilities is key. So per the letter of the law, in order for someone to be compensated as a loan originator, as a loan officer who originates loans, obviously they have to be licensed, which we've taken care of that part. In addition to that, they have to actually originate the loan, right? Imagine that. They have to get the clientele, and they have to start the process with the client itself. You have to have technology to make this streamlined. And that's what a lot of other models are missing out there, is because it's a very manual process, or they just fill out, an application online, and then someone has to then take all that data and put it together into a loan. So about a year and a half ago, we put together a proprietary point of sale system, and the hybrid agents, they simply, in order to start the origination, they need to send their clients to their application link, because every single hybrid loan officer gets an application link. That point of sale application link, when the client applies, pulls their credit. It can automatically attempt to verify their employment. It can read their assets. and it allows the client to even see what options they qualify for. And then once an option is selected, it will even automatically simultaneously run automatic underwriting on the file. All of that is done in about 10 minutes or so. So at that point, someone like Randy is out showing John Smith, the buyer, a property. Maybe John Smith has an old pre-approval. He says, you know what, we need to get an updated one. You know, as you know, I'm a licensed loan originator as well. I work with the team. Why don't you let us help you and just at least get an updated pre-approval? Maybe we can earn your business. And right then and there, John Smith is able to hop on Randy's iPad or his phone and complete the application in 10 minutes. Randy has now originated the loan. Okay. On the back end, a sales manager who all of our sales managers who team up with our hybrid agents have at least 10 years experience in the business. He'll see that client John Smith has come through. He'll begin working on that loan from a managerial standpoint, make sure the loan is structured correctly with Randy, and make sure that all requirements are met so that the customer knows through Randy exactly what terms, what rates, et cetera, that they're getting. At that point, if they want to proceed with us, great, we move forward, but there's a transparency where the customer sees exactly the same thing that Randy would say, exactly the same thing that the sales manager at Brighton Bank would see, transparency, and that technology of being able to simply take 8 to 10 minutes, apply through our application link, but have all of the clerical and administrative tasks done by our AI and automation system makes it a lot easier for hybrid agents to actually originate loans. Otherwise, somebody's got to do all that work. Somebody's got to click the button. Somebody's got to pull credit. Somebody's got to chase down documents. Our system does that automatically for the hybrid agent. It almost acts a little bit like an assistant for them, between them and the sales manager, so that the sales manager can help do what they do best, which is help our hybrid agents structure the loans properly and get it to closing. And the hybrid agents can do what they do best, which is stimulate the market and bring clients in.
That's cool.
And I'll tell you, one of the benefits for me as a real estate agent is that I get to hold on to the relationship. I don't have to hand it off to someone, right? So I can say, well, most loan officers are extremely competent. The fear is always that the guy's not going to pick up the phone. He's not going to get my pre-approval in time. There's a best and final coming up tomorrow with a 4 p.m. deadline. If I don't have my pre-approval, I'm not going to be able to participate in that. I don't lose that control. I get to make sure that I get everything that is needed done very quickly, and the client remains completely mine. And even if I'm a listing agent, when I put my deal in contract and my seller perhaps is moving down to Florida like so many people are, I don't have to get rid of that client hand it off to another agent and a loan officer down in Florida. I can say to my seller, I can put you in touch with the top real estate agent in Delray Beach or wherever it is that you might be moving to, and I can pre-approve you right here on the spot. He's already has confidence in me because I've just done a deal for him and gotten him into contract. I don't have to let go of that relationship. The ability to hold on to that customer, provide a one-stop shop for whatever they need, it's unlimited in potential as far as I'm concerned. That creates great.
If you consider, I've spent more than 30 years on the real estate side, but I know enough about the mortgage side that if you do that for 3 to 5 years and you have that database, customer base, and repeat customer, don't you think they're going to be refining their loan 3 to 5 years from now? And Sean, I don't know, you've been in that industry as a loan officer, because I know the loan officers on this call know the answer, but what's the split between new business and refi for your average loan officer in any city across the nation?
Yeah, in every 5 to 7 year cycle, even a 3 to 5 year cycle, right? We know that over the next year or two, more than likely rates are going to drop pretty significantly. So all the business that you're originating, especially these hybrids from 2021, 2022, let's talk about the end of 2023, right? Business is slower, but that's a heck of a lot of refinances that you can solicit at that point with that database. And so, it should be, generally speaking, anywhere from around 20 to 25% of your volume as a loan originator should be past clients refinancing or even buying other homes. For some loan officers who do a really good job of marketing back to their database, it's even higher. It's 35%. That is a very large source. And what a lot of real estate professionals in general forget is that their database and their clientele is actually their biggest referral source. And so if you want to touch on that for a minute, Chuck, the potential for these hybrid agents to actually tap into that, not just from the agent standpoint, but also on the financing standpoint to assist their customers and the friends and family of those customers, right, is much, much higher because, as Randy said, they've come to them offering a much higher value. We're here to make sure that your financing is in order. We're here to make sure that you get pre-approved right away. We can do it very efficiently. He's there selling a home, possibly helping them buy another one in any state in the country. Right now, these agents' value, and this was another one of our goals, was to be able to increase their value in a very significant way to the consumer, because we know the consumer is extremely self-directed nowadays, especially in the younger generations that are coming to buy homes. They don't visit an agent like they do an attorney like they did decades ago, right? Now they can pick up the phone with the click of a button, reach out to 4 or 5 agents, and it's become very, very competitive. How do you compete with the competitiveness, I like to say? You have to offer what the competition offers. And so in this model, we've taken those different pieces that all of the competition offers collectively, and we're trying to offer that to the real estate market so that they can increase their value to the consumer.
Yeah, and after 30 years in our business, one of the things that I always loved as a real estate agent is the ability for an investor to look at a vacant piece of land and see what will be there in the future. And I think that's a very special talent. And quite frankly, that's what is the mark in any industry of a true entrepreneur and someone that will have immeasurable wealth in the future. I look at this conversation as almost the same because I look back at our start of our conversation, and I always thought it was my company that should have the relationship with the mortgage company, whether that be DeWolf Mortgage or whether that be a JV or whether that be an MSA. And I'm seeing in today's marketplace that it is not the time of the broker. It is not the time of the franchisee. It is the time of the realtor. It is the time of the loan officer. And they're actually one in the same. And like in any other change or opportunity, there'll be some that lead, some that follow, and many that sit on the sidelines. So let's talk about, in kind of wrapping up, because I know we're short on time, what do people actually get paid? Because of course, that's what people want to know. Of course, in today's real estate marketplace, there's shrinking margins, there's shrinking commission structures. So what was in the past isn't certainly what is today. But let's take the loan officer that does a loan for a $300,000 home in Huntsville, Alabama, because we don't want to talk about New York City or LA. Let's take the average transaction at 300 grand. How much is the loan officer generally paid? How much is the real estate agent generally paid? But how much is that hybrid agent paid if in fact they have both licenses? Not on their same transaction, because we know that there are certain elements like me, I just bought a house, I can't do my own loan. The feds say you can't, and rightfully so. Right? So we won't get into that today. But in general, if Randy had someone in his network in Huntsville, Alabama, how much does that hybrid agent make in comparison to the loan officer or the realtor?
Yeah, so we've put a structure together that we want to make it worth everyone's while, right? And sometimes that's easier said than done, especially in a market where there's shrinking margins left and right. But again, we want to make it sustainable.
But it's got to be a win-win. Yeah.
Exactly. So we have a system where the hybrid agent on their first level of responsibility, which is simply originating the loan and making sure their customer understands what terms that they're getting, what rates, what payments, etc., and partners up with a sales manager to get the loan to closing. That hybrid agent can earn up to 50 basis points, which is 0.5% on the loan. So on a $300,000 loan, 50 basis points is a $1,500 commission for originating the loan and partnering up with a sales manager to manage the transaction, get the loan to closing. Right. There is 2 other tiers as well for added responsibility that increases the hybrid agents' commissions. However, most of the hybrid agents that we've onboarded prefer to stay at the lower tier because it's simple for them. They can, again, focus on what they do best, but they can still earn a fair amount of commissions. The sales manager gets an override for managing the transaction and getting the loan to closing, and both of them make some good cash on the deal. But it's a fully compliant way of doing it because the loan goes under the mortgage license of the hybrid agent themselves.
So let me see if I have my math correct, because I'm going to take it not just from the Huntsville, Alabama, but I'm going to take it to Randy's level. Is my math correct that if Randy had 1,000 different people in his network, which I know plenty of top agents across the country, no matter whether they're in EXP or other systems, have a network of individuals that could be friends that they've known from a CRB, CRS, or ABR course, could be any number of different relationships, but we all have our database. If in fact we're dual license and Randy was known by his network that he could do the application and receive 50 basis points or $1,500, you're telling me that if of his network of 1,000 people, if they just simply sent him one transaction, that he just simply did the initial application, 1,000 times 1,500 is 1.5 million. So are you telling me that Randy could make $1.5 million next year?
He could. Randy's a very hard worker and he's a smart guy. And he's probably got a network larger than 1,000 people, I would say, at this point in the game. But yeah, I mean, the potential is phenomenal, Chuck. Because...
Okay, we need to get off this call right now because there's work to be done.
Exactly.
As you were talking, that's where my mind was going. And I know, like when I worked for DeWolf New England, and Dick DeWolf would sit next to me at a boardroom table, and he would talk about his company, I knew he was talking in those terms because I would fully expect that any corporate executive in today's world running companies like, Berkshire Hathaway Home Services or Better Homes and Gardens, or Coldwell Banker, Century 21, my friend Nick who runs Remax, any corporate executive would think that way. But you're telling me that realtors and loan officers should think that way.
Yes, and I love what you said before, Chuck, right? The day of the corporate broker type of setting up business deals that flow from the top downward to the agents, that is being shaken up as we speak constantly.
Yeah.
Because now the power to really change the real estate market and change their personal income is in the hands of the individual. And so we call it graduating from sales to CEO, I like to say, right? You have to look at these transactions as economy of scale and not just say, well, I hope I can talk to this many people and I hope I can get, 10 to 15 closings this year. You have to look at as consumers as what they are. They are consumers, they're customers, and they know other customers. And when you start looking at this business from a 10,000-foot view saying, well, I can provide value in giving my clients a great transparent process on the mortgage side. I can consult them on their selling. I can consult them on their buying. I have a lot of value to offer to my client that really kind of moves the cogs of the machine, but I can help them do it all. It allows the individual to look at their business as an actual business. They're not a transactor, right? Now they run a business. And to your point, if you can help 1,000 people over the course of a year or 2 years or however many, right, the sky is the limit. You have to look at the market though for what it is and saying, I have benefits for the consumer. I have many benefits for the consumer. It's simply about reaching the consumers with the amount of benefits that I have.
Yeah. That's awesome stuff, guys. I know there's never enough time in a day, and there's plenty of people to serve, and we have different people from different industries and different production levels on our call today. Randy, any final thoughts or comments about our conversation?
Yes, if I could, I'd like to go over that math quickly before we can run out of here, because look, everybody would love to make $1.5 million a year, myself included, right? And but I'd rather break it down to a smaller level so that the everyday agent can just see what the benefits are of this. So if you wouldn't mind confirming with me, Sean, on my assumptions here, if you took a $500,000 deal with a 20% down payment, that's a $400,000 loan. a typical real estate agent might get 2% commission on the real estate side. That's $10,000. Let's say he's on a 70-30 split with his brokerage, that's going to leave him with $7,000. If he was a hybrid agent and he also participated at the 50 basis point level on the mortgage side, he's going to get 50 basis points on a $400,000 loan. That's $2,000. He
Correct.
doesn't have to split that with his brokerage. Am I correct?
No.
So that's about a 30% increase on his net of what he's receiving from that particular deal
Correct.
for
Yep.
what is a minimal amount of effort. Again, initiating or originating the loan and communicating the rate, terms, and payment. That's a pretty good deal as far as I'm concerned. And I do have one more question. So the agent doesn't have to be at EXP, right? They can be at any brokerage in the country. Am I correct with that?
You're absolutely correct. We don't require them to change from one real estate company to another. They can do this at any real estate company that they're at.
Correct. They just have to have their mortgage license hanging at Brighton Bank.
Correct. Yeah, and that's a federal regulation across the board at any lending institution in America.
And of course, Sean, in our different dynamics, because our real estate industry is built in many different ways, independent companies, teams, independent brokerages, franchise operations, company-owned operations, any different level could certainly have an individual manager or designated person that would have that hybrid agent that would serve other people in the corporation, correct?
Yeah, absolutely. There's a lot of ways. So we have internal infrastructure where we have mid and upper level management of managers who have phenomenal experience in the business that can receive individual hybrid agents. That there's just, Jane Doe, the hybrid agent in Los Angeles, California, who's got a lot of business, her and her assistant, and they do fantastic out there, and they want to plug into Brighton Bank. And then we've got a sales team of 25 agents. And they're doing $100 million or $150 million a year, and they want to form a team and plug in to one of the sales managers, or even find their own who can facilitate all of their loans that they're going to put through their team and through whatever hybrid agent that they determine should be that person. And then we have sometimes even brokerages where you have a brokerage of 300 to 400 agents that has dozens and dozens of buyer side opportunities every single month, where the broker themselves will come on board and they become a hybrid agent and they facilitate. So in those three different examples, Chuck, we've got models for all three because we see that on a regular basis. And it's really about us finding out if we can partner up and offer a good solution based upon the changing marketplace, and finding the right agents who see the same vision that we do and want to be a part of that.
Well, I've found in my history in real estate, no real estate agent joins a real estate company for one reason. It's usually a handful of reasons. No one person would talk to us further about this situation unless there were multiple. And what I'm hearing is some people might join simply for the technology, because the technology is much more efficient and provides a smoother, more transparent scenario. They might join for the income because an additional $1,500, as we're discussing, certainly will serve the needs of their financial future or their family. They might join for the fact that they could build a business within a business and be able to do what brokers did in the past by doing it today. Not that it's exclusive to loan officers or realtors. Brokers and large companies are open just as much, but quite frankly, this is an opportunity for everyone. They might join for the leadership, or they might just join because there's a handful of reasons to investigate, to learn, to take a look at what their next step in the career is. So I appreciate your time, gentlemen, because at the end of the day, the conversation is about helping other people and providing opportunity. And it's not for everyone. There'll only be a percentage of people that will want to do it, and that's fine, because that's what all industries are like. But Sean, any final comments as we close out today?
No, thank you for the time, Chuck and Randy. It's good to speak to both of you guys today on the subject of a changing industry. And I guess I would leave anyone who's listening with just the thought that, as you said, there is a lot of ways to win in this industry. There's a lot of different models out there, and some of neither one of them are right or wrong. Some of them have a short lifespan, some of them have a long lifespan. This is simply a solution that we're trying to offer the marketplace for an ever-changing marketplace, and in a way that puts a lot of power back in the individual's hands and allows them to service their customers in a better way. Because one thing is for certain, over the next several decades, is the power is going to be in the consumer's hand to decide what and who they want to work with. And so in order to capture more consumers and more customers to you, you need to be able to service them in more ways. And so that's exactly what this model does for the agents. And we hope it creates many, many hundreds and thousands of successful agents for many years to come.
Thank you, Sean. Thank you, Randy. Just to touch on today's conversation, there's so much to cover. We couldn't really get to the people that are online and the questions that have come through the chat today. But I'm very happy that we covered at least enough so that if people had interest, they could connect. What we'll do is provide some information at the end of this webinar so that you'll have an ability to talk to either both of you or myself in regards to those questions that normally come up in the most important question, which is, what am I going to do next? What's next in my career, and what's next for myself and my family? So, gentlemen, thank you very much for your time. Any final comments before I close out?
I got a quick one, and it's sort of a
Yeah.
thank you as well. People join different companies because of models, because of technology, but really they join because of people. And for me, joining this company, a big part of it was joining the people that I joined, whether it be Dave Gagnon, Michael Sema, of course, Chuck and Sean. The opportunity to link arms with leaders of leaders was something that I could not pass up, and I'm very happy that I did.
We feel the same way, Randy. Thank you.